We're getting a lot of phone calls from people saying, my mother, my father, my grandmother, my grandfather passed away. They have a reverse mortgage. We live in the home and we want to keep the home. So reverse mortgages. What are reverse mortgages? Typically speaking, reverse mortgages are mortgages that do not require mortgage payments, okay? They're most popular, well, certainly they're only for people who are elderly. You typically have to be above 61 years old. There are some programs that can start as low as 58, but let's just say you have to be a senior citizen. It's typically very popular for elderly people because as they encroach upon their sunset years and their income dips or becomes fixed income because they're only living on a pension or Social Security, they want to have their expenses as low as possible. One way to keep your expenses down is not to have a mortgage payment. But if you're not paying the mortgage, who's paying it? The person who's paying the mortgage is actually the mortgage company. The mortgage company is adding money to your principal each month. Let's say you have a house that's worth $1 million, and let's say you get a $500,000 reverse mortgage, or let's say your grandma or grandpa got a $500,000 reverse mortgage, and your mortgage payment is $2,000 every month. You don't have to pay $2,000 every month. What happens is the $500,000 balance goes up by $2,000 every month. So your $500,000 mortgage becomes a $502, a $504, a $506, $24,000 a year gets added to that. So imagine somebody lives for 10 years with a reverse mortgage, $2,000 a month is being added to that principal. If we're using my example of $500,000, you're adding 12 months of $2,000 is $24,000. 10 years makes it $240,000. So when your grandma or grandpa with the reverse mortgage passes away, their loan balance, instead of being $500,000, is going to be $740,000. That's how much is owed to the bank. But the property is worth $1 million, as we said earlier in this example. What does that mean for you? If you are the surviving heir, the beneficiary, you need to be on top of this, okay? If I can give one word of advice, it's one word, but I'm gonna say it 3 times. Fast, fast, fast. Do not wait if you are the beneficiary of a reverse mortgage, because when the borrower, let's say it's Grandpa Joe, when Grandpa Joe dies, that loan becomes due. Full and payable becomes due. So again, in our example, $740,000 comes due at one time. And if this bank, if this mortgage company, the reverse mortgage company does not get paid, guess what? They're coming after the house and they're coming to foreclose on the home. So you have 2 options to save your house or to save your grandparents' house in a reverse mortgage scenario. Number 1, you sell it, you pay off the $740,000, whatever's left goes into your pocket or the heirs and the beneficiaries' pockets. Or option number 2, they say, Josh, I want to keep my home. I want to keep my home. How do I get to keep my home in a reverse mortgage? I tell them you have to refinance the home. Whoever is the beneficiary, whoever's the surviving heir, needs to go out, needs to get a new mortgage. Now, how much is the mortgage? $740,000 is the new mortgage. So if you are a surviving heir, the first thing you have to look on, again, how quickly do you look? Fast, fast, fast. Determine, can I actually get a $740,000 mortgage? If the answer is yes, go out, refinance, pay off the reverse mortgage, and live happily ever after in the house. If you can't get a $740,000 mortgage for whatever reason, your finances don't add up, you're still in school, you have bad credit, you haven't filed your tax returns, whatever the reason, you need to quickly look into selling the home, or else you're gonna lose Grandpa Joe's home and everything that you've loved and worked for hard. It's really a very emotional thing, reverse mortgage, because oftentimes the people who are left a home think that the home is more secure than it is, and they have lifelong memories in those homes. So it's very sad when people lose houses to reverse mortgages. 2 options, refinance, sell. One thing to do, but I'll say it 3 more times for you. Move fast, fast, fast. Guys, Josh Sternberg, Sternberg Law Group, subscribe below. Feel free to check us out online and watch some more of our videos if you have questions. Our job is to keep people in their homes. Thank you.